a deal within 8 weeks is realistic, but that's supposed to be the easy part. The hard work sort of starts after that. We're already hearing the UK Brexiteers are said to brace for a new fight over EU laws. Is the spike in sterling a little bit premature?
I think it's interesting that sterling seems to be moving more on what the Europeans are saying rather than what the UK politicians are saying. My base case is that in the end, the UK and the EU will agree to some trade deal in goods that keeps the Irish border open. Let's call that a semi-soft Brexit. My hard Brexit risk is about 20%, and of course for that we have to watch the Brexiteers within the UK. They could, in the end, scupper a deal that May tries to pass through Parliament if indeed we don't get a little help for May from the Liberal Democrats, from the SNP, maybe even a few pragmatic Labour MPs help her get the final deal over the line.
Callum, you've got a wonderful analogy in terms of the hard Brexiteers, the Jacob Rees-Moggs of this world. You suggest that the group of Brexiteers, hard Brexiteers, might be up for deal-making over bloody-mindedness.
Let's do the analyst trick. Take your pen from the beginning of Brexit negotiations until today. You see that the Conservative Party have decided they would rather negotiate between themselves and compromise in order to avoid the risk of snap elections and have the risk of, say, a socialist, Mr. Corbyn, in number 10, which means that for the Brexiteers, the so-called red lines are not really red lines. They've crossed them at each and every stage when necessary. I think they're more like kidney stones. They'll pass them, it's painful, but afterwards, overall, the party is healthier. So my best guess would be that the majority of moderates will bring the Brexiteers and the Remainers within the Conservatives around the table and say, look, let's figure all this out ex post, let's get a deal, let's avoid the risk of fresh elections and at least stay in power, because come 2022, probably Jeremy Corbyn will look like such a weirdo. If the economy is still in decent shape, we can easily win that election.
Yeah, and speaking of the economy, Callum, you put the probability of a hard Brexit at 20%. So let's say we get that soft Brexit, we get through March. What happens with the Bank of England then? Could we get more hikes? Of course, we're awaiting a decision this week. Not expected, but I mean beyond March.
The economy is already improving in the second half of this year, largely because consumer fundamentals are getting better. I think in 2019, 2020, strong jobs gains, stronger real wage growth should push consumer demand on a little stronger. That would mean stronger economic growth, say 1.8% next year, 1.7% in 2020. And on the back of that, the Bank of England can then accelerate the pace of normalisation. I'm expecting 2 hikes in 2019, 2 hikes in 2020. I think it makes sense for the Bank of England to wait until after March 2019, at least when Brexit happens, before they start to prepare markets for the next rate hikes. I think we'll go through a quiet period, and then pretty much immediately after Brexit in March 2019, we'll see more hawkish signals from the bank.
Well, Callum, of course, yesterday we got a nice reading, didn't we, in terms of the GDP. We popped some of the growth numbers into the GTV library, which shows that highest reading in nearly a year. The services picked up. Today we get wages. I didn't think we'd be having this conversation just about the growth momentum. This really does defy the doomsayers of Brexit. The economy's doing fine, even though we haven't Brexited yet. What about the wage and constriction in the UK employment market? What do you expect today?
I don't see much of a tick-up. We might get to 2.8 year over year in the jobs numbers. All the data suggests that the labour market is tight. We have a record level of job openings. We're well below the Bank of England's estimate of full employment. But the mere fact that employment gains remain strong suggests that there's still some supply growth there. When we start to see employment gains slow and wages pick up, I think only then we can conclude that the labour market is close to full employment.